All right. So the thing is, so if you have here my teachings, the thing is the model you're going to use. You have so many things to study for, so it might be really hard to understand and all those things. So there are so many things. I'll show you something. So these BOS, BSL, CHO, CH, all these things are terms you need to study. And I have only covered market structure shift, the MSS, and a fair value gap, and the what's called displacement, and swing highs and swing lows. So there are all these things to cover before we go into the entry model. So I think if I go straight to the entry model now, I think you guys not gonna understand anything. But I'll show you the entry model. Just observe the entry model. I will teach you all the basics in a different time or a different session. I'll teach you all the basics, but I'll show you the entry model here. So this is a UTC -4. We go to 10 a.m. to 11 a.m. New York time, 10 a.m. to 11 a.m. New York time here. That is, so we are trading in the 1 minute time frame, 1 minute time frame. Yeah. Go to 10 a.m. to 11 a.m. New York time. Let's go to 10 a.m. What's 10 a.m. here? Yeah, right. 10 a.m. 11 a.m. So this is the entry model. I'll show you. So we don't have time to go all the basics, so I'll cover in a different session. You have to study breaker blocks, all those things. So the price comes down, takes the sell side liquidity right here. It's called the sell side liquidity. Here's where the sell stops. The orders, the smart money order, not smart money, the retail people, they will have their sell limits right here so they can sell. So what the smart money, the banks does is the price, they take the price and comes here and fills the sell orders, and they goes back and take their stops. So they lose their money. The retail traders lose their money, and the institutional banks get money. That's how it works. So all the retail knowledge doesn't work in the smart money. Yeah? So in this model, the price takes the sell side liquidity. As soon as the price takes the sell side liquidity, we are looking for buys. That's it. We are looking for buys. No other things. So we looking for buys, but we need a market structure shift with displacement. Yeah. So the price takes the liquidity right here in these three candles, and the price, what happens is the price goes back. Doesn't take the swing high right here. It doesn't take the swing right. What does it do? It goes down again. It goes down again. Grabs the liquidity. It's a liquidity graph. Okay? Grabs the liquidity. All the buy orders. Okay? All the buy liquid right here. All the orders of buying pressure is high now. Grabs liquidity and breaks the swing high right here. See this green candle breaks this wick. So you guys might ask, there's a fair value gap right here, and this black candle is that's a market structure shift. That's not a market structure shift because it's just a wick. We need the wick. We need this swing high to be broken by the body and the wick both. So if this, so So personally, I wouldn't take this trade right here. So what happens is this candle with this placement breaks the swing high, and this, you see the red candle right here comes to the breaker block. So this is called the breaker block. So we did not get the entry in the fair value gap, but we got an entry here in the breaker block. So breaker block is a different concept here. I can't cover all those things in one session. I'll cover in a different session. And what I'll do is, my entry will be right here in the breaker block. So this is the breaker block, and my stop loss. Stop loss below here, and I'll target all the way to this imbalance right here. See the imbalance. Price comes here, rebalance. See the wick. Price comes here, fills the rebalance, comes down. So this is our take profit level. Yeah, this is our take profit level for 1:3, 1:4. So if you have gotten a trade here in the FEG, that's a 1:5. If you have gotten the breaker block, that's a 1:3 or 1:10. So imagine if you missed the entry right here. Imagine if you missed the entry. No, if you missed the entry right here on the fair value gap and also on the breaker block. So what you do is take a fib, yeah, you take a Fibonacci here. But I wouldn't recommend to trade like this if you're a beginner. Take a Fibonacci. You see the fifth 0.5 line. That's 50%. Price comes to the 50%. ICT optimal trade entry right here. Create a market structure shift. Comes back. A trade right here. We aim for the liquid here, the buy side liquid. See, it taps the buy side liquid and comes down. See that? This is how accurate this trade is. It taps the buy side liquidity, takes all the buy side liquidity, and comes down. This is how smart money works. So here we will be resting buy orders. So there will be huge amount of buy orders from the retail traders right here. And what the banks does is, banks goes back here. So we smart money people take the profit right here. And what the retail traders does is, they will have a buy order right here, and the banks goes to the buy order, taps the buy order. So what happens if they tap the buy orders? The trade starts here. The retail traders trade starts and start going up, and their stops will be somewhere here. Their stops will be somewhere here. And what happens is, the banks taps the buy orders and comes down. So they took your take stop loss. You see, they took your stop loss right here. So this was your second take profit. Your first take profit is here. Your second take profit is here. TD1 and TD2. Or if you hold the trade, if you had hold the trade, it goes all the way 70 pips to for a 1:12. I wouldn't recommend you to take this trade course. You guys are beginners. If you're a beginner, don't do it. I only recommend you to take the 1:1. 1:1, that's it. 1:1 or 1:2 for the imbalance right here. See the big imbalance right here. this is a big imbalance where the price are not given opportunity to buyers. So price comes here, take the profit right here. Right here in the box, take the profit. Or take the profit in the 1:1 if you're a beginner here. So if you know more about the price action, if you know all these things, you can hold the trades and trade to the buy side liquid right here. But I wouldn't tell you to risk your capital for that. So I took this trade and I took a 1:5. So personally, I took this trade and I got a 1:5, and I took my profit right here in this imbalance right here. So I'll tell you once more. Price comes back to 10 p.m. Price comes to 10 p.m. Our trading period 10 to 11 a.m. 10 p.m. 10 a.m. to 11 a.m. New York time. Price takes the liquid sell side liquidity. When it takes the sell side liquidity, it look for buys. So let's mute the mic here. Yeah. As soon as they take the sell side liquidity, it creates a market structure shift right here. This is the market structure shift. Now let market structure shift comes back to the fair value gap or the breakable trades straight to our target. So this is our first entry model. The first model. I'll show you a different example. I'll show a different time here. So we mark our 10 a.m. to 11 a.m. New York time. So this is 10 a.m. to 11 a.m. New York time. The price, you see, the price takes out the liquid, that takes the buy side liquid, comes back, creates a market structure shift right here. That's a market structure shift. Takes the liquid, takes the buy side liquid, comes back, there's a market structure shift. With displacement, you see the displacement, the big bearish candle, which takes out all this green candles and creates a fair value gap right here. You see how accurate this is? The price comes in, taps the fair value gap. So there will be, so I'll personally have a limit order right here. I would personally have a limit order to sell right here. Taps the fair value gap. I'll trade here. My stops right here above the high, and I'll trade all the way to this fair value gap right here. If you can see, if you look to the past, we go to the past, there's a fair value gap imbalance right here. See, the price comes and fills the imbalance. You see how accurate is this? Price comes and fills the imbalance right here and trades back. So why does it trade back? That's your second entry. See the market structure, see the break of structure. Yeah, and creates a big fair value gap. Price comes back to here. That's your second trade. It's like second trade goes all the way down. So I would personally target my take profit. If I had an entry from here, Okay. If my entry was from here, my stop loss here will be here, and the take profit will be here for 1:2. That will be my trade. That's it. So if I miss the trade, I won't like cry about how I missed the trade, all those things. Yeah. If I miss the trade, that's it. I missed it, and I'll go to the next day. I'll be using my same concept next day, and there's high probability I will get the trade. So I'll show you one more example. One more example. So one more example. So don't you only take this. So this thing, the model is called the silver bullet. The silver bullet, and you only take this trades on GU and EU, or don't take in any other pairs. Only Euro USD and GBP USD. No, no any other pair. So let's go to the 10 a.m. and 11 a.m. New York time. Yeah, all the way. Yeah, right here. 10 a.m. So 10 a.m. 11 a.m. New York time. I'm telling you, it's New York time. What does the price do? Price takes the sell side liquidity right here. See, price takes the sell side liquidity right here. So what are we looking for? We're looking for buys. When the price takes the sell side liquidity, we look for buys. That's it. We don't look for sells, or we don't look for any other things. Even the market moves sideways, all those things. We only look for buys. If there's a if the market takes the sell side liquid, so there's a sell side liquid. So why I call this a sell side liquid? So there's liquidity resting below the K, and there are sell orders by the retail traders. So there are smart money traders with buy orders right here, huge buy orders. So that's why I call sell side liquid. And what happens? Price breaks the structure right here. You can start your time from 9:50 a.m. New York time. That's no problem. But don't go below 9:50 a.m. Alright? 9:50 to 11 a.m. That's it. Or 10 to 11. 9:50 is alright. You see, and this is the swing high. Swing high. See these three candles, swing high, comes back, takes the sell side liquidity. See this up close candles, the green, the bullish up close candles, creates a market structure shift right here. Breaks the green candles, breaks this swing high and creates a market structure shift. That's the market structure shift with the body, no wick, not just the wick, with the body too. So it creates the market structure shape, and what up? You see the fair value gap right here. All these things are fair value. See how the market comes back to the fair value gap right here. We look for longs, we look for buys, and we will target this imbalance right here. Look at the past. We'll target this imbalance right here. See, that's a 1:7, 1:8, yeah. One is not 1:1, 1:1.8, 1:1.7, yeah. So preferably take a 1:1. Always pay yourself. Always. That's 1:1.
Upload your smart.
So this will be my TP1. Take profit one right here in the middle of here. And if you want to like take a TP2 or take profit 2, go back to the 5 minute. I'll show you. I'll mark my take profits 1, take profit 1, take profit 2, and take profit 3 right there. Let's go to 1 minute. So all the take profits are on the imbalance where the market is going to rebalance. Yeah. See, market trades to the imbalance, and it also trades back to the imbalance right here, the 1 minute imbalance right here. See what happens? It goes down. So personally, I will extend my trade right here. So it's a 1:4. So if you're like an advanced trader, you can like take profit right here. Or I wouldn't risk my profit, so I'll take profit right here. I'll take a TP1 right here, my partials. I'll take partials right here and I'll hold the trades till here. TP, that's a TP2, TP1. So I'll tell you once more. Yeah. I haven't covered all the basics because if I start to cover all the basics, that's like a 5-6 hour long session. So I'll cover that in a different session, and also I'll make videos of the basics and I'll post in the Discord group. So I'll tell you once more. Price before the 10 a.m. price takes the liquidity, sell side liquid, and creates the market structure shift right here, trades back to this fair value gap, boom, goes up for 1:4 hour. So we are trading in the 1 minute time frame, 30-second time frame, that's it. 1 minute and 30 seconds. So if you don't get an entry in the 1 minute, look for the 30 seconds, you will get an entry. Yeah. Well, remember, every day is not a trading day. Every day is not a trading day. There will be times there are no missed entries. There are missed entries. There will be times the fair value gap is not filled, so you don't take the trade. Yeah, you don't take it. That's it. And I'll show you one more thing, which the thing is, in this session, I haven't covered all these things, liquidity, grab liquidity, only covered market structure shift, break. I think I didn't know cover break of structure yet. So sell side liquid, and or I only covered these two. Only like I took like 1 hour, I think, for covering these two. I think I took like 1 hour, and I only covered fair value gap and all those things here. I bring or I'm video. Yeah, I'll record the video. I'll record the video. Can you please explain again liquidity of the market? How do you support it? Oh, let's take out all these things. Where is it? Where is it? Oh, yeah, only. Let's go to the 10 a.m. New York time. So the first one you go to trade, you go to the 15-minute time frame. This is how we start the trade. Yeah. Well, this is our approach to this thing, this model. Go to 15-minute time frame. So I'll mark my 10 a.m. and 11 a.m. New York time. So before 10 a.m., 11 a.m. New York time. So she asked me like, well, what do you say? Oh, so This is the liquidity pool right here. All these are liquidity pools. There's liquidity resting below swing lows and swing highs. I told you in the first session here, liquidity resting below swing lows and swing highs. That's how you spot it. Liquidity is resting below every swing lows and swing highs. So this is the higher time frame liquid. And if you want to spot the liquid in the lower time frame, in the lower time frame, swing lows and swing highs, there will be liquidity rest. So when I approach to this trading model, I always look for higher time frame swing highs. So this is the higher time frame swing highs. The price takes the swing high, takes the liquidity, goes down all the way to the trading time of 10 a.m. and takes this swing low, which is where the liquidity rests. And what happens? Where's the yeah, all the way down. Takes this is the liquidity right here in the swing low. Takes the liquidity, creates the market structure shape, trades back to this breaker block right here. Breaker block. So breaker block is here. FVGC, fair value gap is here. Takes back to the breaker block. We enter for buys. So why we enter for buys? Because this is a sell side liquidity, SSL. So when it took the buy side liquidity right here, see price comes down. When it takes the sell side liquidity right here, price goes up. And trades down to the breaker block. My stops below here, target straight here. Yeah, this will be my trade. So there will be only 5 minutes left for the session. So if you have any doubts, type in the chat. I know I haven't covered all the basics, but I'll cover in a different session or I'll make videos. I'll promise you I'll teach you every single thing about this model, everything. It's really profitable. I have like 60%, 70% win rate for this model if you apply it in the right way. So if you guys have any doubt, like type in the chat. So just type in the chat if you understand, or if you don't understand, just type I did not understand. That's all I type in, so I can understand like how many people understood what I'm saying, so I can make changes in the next session the way. So if I need to improve something, just say. Yeah, but you can only like trade in EU and GU. Why is it? Because it's USD parent. So Euro, USD, GU, that's a major price, high liquidity. So if you go to GBP, JPY, there will be trades, but not be that accurate. So if you want to get most accurate, trade in EU and GU. And if you're a futures trader, trade in E-mini, S&P, and Nasdaq. Yeah, these are the 4 things: EU, GU, E-mini, S&P, and E-mini, Nasdaq. Yeah. So yeah, I'll cover all those things. I'll make videos. Yeah, I'll make videos of all the single market structure, shape, breakout structure, all those things. I'll make videos and I'll share it in the Discord, trading materials. I'll share everything so you guys understand everything. So, you guys have any more doubts or something about like? Yeah, I know. It's really hard to understand. But if you master the strategy, you master it, gonna be profitable. You only need like 1 or 2 hour a day for this strategy. You don't need to like spend 7 or 8 hours in a single strategy. You don't need this is a scalp. 1 hour scalp, say 1 hour scalp or 10 minutes, 15 minutes, 20 minutes scalp. That's it. You don't need to sit all the way to 7 hours and hours. Yeah, I know. Yeah, I will. So I'll make beginner videos. Yeah, I'll make all the beginner videos for this thing. I'll cover all the topic for breakout structure, market shift, all those things. And you guys study all the things what I'm saying, and I'll bring you more models like this. And you guys, the thing is, you guys need to back test the strategy like 100 times every day. Backtest it. If you backtest it, you get it. I mean, how the permission to like give you in the Discord. So there's a trading material channel on Discord. I'll give you in the Discord. So there's only 1 minute left here. Yeah, it is complex. Yeah, it's really complex. But if you understand the strategy, you're gonna be the top 1%. I'm telling you, you're gonna be the top one. So this is ICT concept. Yeah. So if you guys are going to YouTube channel, like go to YouTube channel, type in the circle trader ICT. You can see this is channel. He's teaching you this. That's more like a university. I haven't been able to complete all this video. I haven't completed really hard, really hard. But I'll try to make it simpler, and I'll give you the entry model. So the thing is, the market doesn't work on trend lines, support and resistance, all those things. The market doesn't work on that. The market only works on liquidity, imbalance, rebalance, fair value. That's it. That's how the market works. That's how the institutions trade, the banks trade. All right, guys, we have to end our session. I think I have record. There's only 1 minute left, so we'll end our session in 30 seconds or thing. So go to this